Welcome to the Possible Promise Podcast. Every Monday, Wednesday, and Friday, we go live at 12 p.m. Eastern to break down the complexities of finance and point the way to financial success. Today is July 6th, 2020, and I am your host, Brandon Oliveris.
And I'm his wife, Christine.
This is episode 11. There's no room for hope in the market. Welcome everyone to our podcast. I hope everyone had a wonderful 4th of July weekend. I know we certainly did.
Yes, we did. We set off fireworks. Well, not the dangerous kind.
No, just...
sparklers and snaps. And
yeah, really. I haven't done fireworks since I was
a teenager?
Kid. Yeah, I don't remember how old I was.
Now he's a grumpy old man.
I'm not that... Well, I'm grumpy. Not that old, though.
31. 31.
But we had a lot of fun with fireworks. I introduced Christine to them because I haven't done them for years.
And I've never had the guts to set them off myself.
It was fun.
It was.
It was a lot of fun.
A mess, but fun. They're messy.
Yeah, it was a mess. But I love the snaps. They're these little ones you throw on the ground and they just pop. And I think they have a little spark, maybe. I don't know.
Yeah, I couldn't see them.
I just like them for the noise.
Sparklers I liked because I could actually see them.
So we had a really good 4th of July weekend. Very lazy. It was weird having a long weekend. No trading. And now we're off to the market's gapping up today for sure. So it's...
So it's actually up today?
It is very, very up today. Yep.
That's good.
So it's been pretty nuts. But yeah, so let's get into the market. What's that?
I was going to say probably because it's right after the 4th.
There just wasn't much news over the weekend, and I don't know. It's nuts. I don't think it should be as up as it is, but it is what it is. So let's get into the market. Yeah, the S&P is up 51 handles, over 1.5%, like 1.64%. It opened, let's see, earlier when I checked, it was up like maybe 40 or so, but now it's up 51.
Whoa.
The Dow back over 26. It's up almost 400 points, about 1.5%. NASDAQ is up about 280 points, over 2%.
Wow, that's crazy.
And the VIX, the poor VIX, is actually not as down as I would have thought it would be. It's only down like half a percent, only 13 cents. So I'm very surprised about that actually, because usually when the market's up so much, it means the volatility is going to go down.
Huh.
But I'm actually surprised it's not so much. What I've heard is that July and August tend to be pretty volatile and not as much trading going on. The volume's not as high. It's, the summer and everything.
Yeah.
But also because of that, there's more volatility, and also because of there's no more triple witching until it was like September, I think, or whatever it is.
Yeah, because it was in June, right?
Right. So that frees up a lot of money. So the market's a little more volatile for a while in July and August. So we'll have to see what happens. But yeah, so the indices are kind of going nuts today. NASDAQ, I just can't believe it. They reached another all-time high, and as it does like every day. And we'll just have to see where it goes this week. I mean, I don't know. It's nuts. It's just crazy. And I mean, I just have no idea what's going on with all that. So I can't even say where I think it's going to go this week. I mean, it just depends what happens. I know last week we had the news on the vaccine, the positive news about that potential vaccine. The thing is, like, over the weekend, it's been ignoring like the higher, there are a whole bunch of states with all-time high of cases, and so it's just the market's totally ignoring that, and I think you can't do that forever. So, but that's what's happening today. So, so I think I will just get into. I want to go to our topics. I'm just going into our stock picks. That's really all I have to say about the market. This morning I woke up because I knew. Real quick, I knew that the market or the futures were up last night. Actually, they started out pretty unchanged, but when they opened up, they quickly went higher. And so this morning, I was a little bit scared to look at the market because I have a lot of short positions on, and so yeah, it's just been a crazy morning. I did have one position close out, so that was a good thing, but it's just been nuts. So let's just move right along and get into let me find it, our stock picks. There we go, dancing again. Okay. So our weekly stock picks. I have to say, first of all, an update. I know this is several weeks old, but I sold Smith & Wesson today, SWBI. It has absolutely just ripped. It went up, last I looked, it went up 8% today alone. I made, I think, 30% off of the stock.
Whoa.
I bought it at $18.14 and I sold it. Let me see if I can find it. I sold it, yeah, that's it, at $24.56.
Yeah, that was like one of the first ones you.
Yeah, so that's a 35% gain.
Was that your first stock pick you did?
It was not my first. I don't think it was my first. It was maybe a week or two in.
Oh, it was?
I
Oh.
believe so. Yeah, I don't know. But
don't know,
anyway,
I thought
just
it was
wanted to update that because
That's cool.
that one. I mean, I almost sold it last week because it was just going crazy. But this morning, and I don't even know if there was news. I didn't see any. But I mean, I don't know. Probably just all the protests and stuff going on. It just absolutely ripped this morning.
That's crazy.
And I'm going to take my profits on it. If it pulls back at all, I might buy back in because I love this stock. It's doing great. But yeah, I sold out of Smith & Wesson this morning. So that happened. And so an update about last week, we did an options pick instead of a regular stock pick. I made it the same thing today. I will do the same thing today. And that one is a perfect example of what we were talking about last Thursday. Because last Thursday I was talking about the probability of touch versus the probability of ending out of the money. And today, with the rally going on, I don't know where it is now. Where is SPY? If you remember, the option last week was SPY, a short call at 317, a long call at 319.
Oh, yeah, that's right.
And so it's pulled back a bit. Earlier, it did touch 317. Right now at this moment, it's a 316.35. So it breached our short strike this morning. And it's a really good example of what we were talking about because, you know, that's over 50% chance that was going to happen. Do I believe it's going to do that again or remain over that point until expiration? No, I really, really, really don't. I really think this is the upper end of the range. Once news, more news starts to set in or more of the economic repercussions of everything going on, I think, the market will sort of sober up a little bit, and especially with the volatility inherent to July and August, I think there's a lot more that's going to happen. But it's just to say, it touched the short strike this morning, and this is a perfect example because you don't want to panic sell and be like, oh my gosh, it's going up and up and up, and it touched the short strike at 317, and now what are we going to do? I'm extremely, now I could be wrong, but I'm extremely confident that at some point within the next month, remember this expires August 7th, that at some point, literally within the next 32 days, I think it is, that it will fall sufficiently to get a good profit off of it. So that's just, kind of not a warning, but a note. in case anyone else followed through with that trade, because we we did that last Monday, and pretty much all last week the market just went up and up and up and and so it can seem like a stupid trade, but I really don't think it is. So just a note about that. And our earnings pick for last week, Helen of Troy has earnings this Thursday, the 9th. That is Thursday, right?
Yes.
Before the market opens. It was kind of flat all last week. It was really disappointing. Today it's kind of caught a bid. Let me see what it is right now. Right now it's sitting 189.30. It was up over 190. So it's just kind of... I am in profit, maybe about 1% or so, not a ton, but we'll see what it does as Thursday approaches. So today... sorry. I was stupid and had cheese again. I'm going to do the same thing as last week with an options pick instead of just a stock pick.
Are you doing a stock pick too? Or?
Yes, I'm going to do I have an earnings too.
Okay, good.
I already have that picked out, yeah. So I'm going to use my little script that people keep telling me I should sell. And I'm not going to... Let's see. Okay.
You choose it now.
I'm happy with this one, actually. Let me see what the mid... Let's see. It's XLU, Utilities. I just closed out a good one on this last week, so I'm actually really happy about this. Okay, so we have XLU... I should have fixed my script to get the expiration. Expiration... August 21st. So that's perfect. That's a good... I don't even know what the days to expiration on that is.
Over a month?
Yeah, it's well over probably 40 days or so.
And 40 nights? No.
Sure.
I couldn't resist. I'm sorry.
Anyway, so XLU, which is again Utilities ETF, and it's a short call on 59 and a long call on 61. So I like to keep them pretty close together. This is, again, a $2 wide spread. And the current price of XLU is $56.88. Right now, we can hope to get about a 56-cent credit off of that. So I'm going to make this trade as we speak, and I'll let you guys know when it's filled. And
Y/N.
What do you want? I'm going to open up my brokerage to check there if it fills, and I can let everyone know. Sorry about the...
Darn it doesn't make noises like,
I'm very sorry, I know. Alright, so we'll let that run. I'm trying for 56 cents, and we'll just kind of see what happens there, right?
You gotta find a little bell or something if it works.
I'm very sorry. But, anyway, so... Did it
fill? I thought I heard it say fill.
No, actually, it's asking me to lower the price, so we'll see what it does. So that again, XLU long call at 59, or short call at 59, long call at 61, and so that's for August 21st. So we're gonna move on. I'll keep checking on this. It's still trying to fill. If it doesn't work, I'll pick something else, but it should work at some point. All right, so our earnings pick is Preferred Bank, obviously finance,
of course.
PFBC. Okay, that's PFBC. A little bit of awkward lettering. Anyway, they have earnings on July 15th. Yep. And they're expected, their expected earnings is, 79 cents per share. They could beat earnings by about 26%. And their last beat was about 5.88%. So in the last quarter. So they've been, and the nice thing about them, their RSI is pretty flat. So that's been good. And that's not been bid up too much because it's over a week until the earnings. So I think it's a good name to get into because it hasn't been running already. And so there's still a lot of room, I think. Last I looked, it was up a bit today, but not too crazily. So it's about a $40 stock or so. So that's my earnings pick, is Preferred Bank, PFBC. So we'll see what that one does. Let me see what this is still working on it. So yeah, just to summarize our options pick again, XLU. I'll put this in the show notes also. XLU, 59 and 61 calls for August 21st. And then PFBC is our earnings for July 15th is their earnings. So we'll see how that goes. We got a fill!
Ching!
Okay, so instead of the 56 cents I wanted, we got a 54 cent fill. So let's just see what you can get it at. I mean, that's just... Okay, no, I don't want to continue.
That's cool.
All right, so you see how that works.
So do you have to lower the prices, or just your script?
It asks me if I want to lower it, and it lowers it a penny at a time. So what my script does, I mean, I can, change the
So
behavior.
did you say yes to that then?
Yeah, so I did it twice. So it tries to fill it for, I don't know, I can't remember, 10 or 15 seconds. And no, it tries for, I think, 30 seconds. And if it doesn't fill within 30 seconds, it asks me if I want to lower the price. It lowers it by 1 cent. And then it tries again, and so on and so forth. And I can say no to if I want to keep it at the current price. And so that's how it works.
That's really cool.
And it works really well. So I'm glad I kind of got to demonstrate a little bit, because you don't always get filled at the mid price. And I don't, you don't want to go too far off the mid.
Yeah.
And, I could have let it sit there for a while. Some people were different, where some people will let it sit there for a while and see if they can get filled at that price. I would rather get filled now, as long as I don't have to move too much off the mid price. The mid is like a halfway point between the bid and the ask. So that's a topic for another day. Mm-hmm. But, I didn't have to move too far, just 2 cents, which isn't too bad.
Right.
So that one, so what I'll do, what the script did automatically is it filled it at 54 cents. It put in an order, good till canceled, for 27 cents, because that's half of 54. And so if and when, hopefully, that spread is worth 27 cents, it will buy it back, and I'll have a 27 cent or dollar profit. So that's how that works.
Awesome.
Yeah.
I said, wow, awesome.
Yep. All right, so those are our picks. Let's get into our topic. There's no room for hope in the market. Sounds really dire, doesn't it?
A little bit. Wow.
Yeah, we're doing good on time today. So,
yeah, I realize I say stuff and there's no context.
that's why I always clarify.
I'm like, darn it!
Why is Christina saying "wow"?
Because I just don't think about it. That no one else can hear the voiceover.
I know.
I'm like, I gotta be more careful.
That would be good, though. Can you imagine if... Oh, I don't mind it. I don't want to explain it. Can you imagine if people had to hear voiceover with all the stuff that I have to look up?
Oh, my God.
That would be an incredibly annoying podcast.
We should do one podcast.
No, we really shouldn't. Everyone would stop listening.
Or for like 2 seconds.
Sure.
Or 2 minutes.
No, that's okay. This sounds like a dire topic. I promise it's not as much as you think. It's not like, abandon all hope, all you who enter here, or whatever. Isn't that the saying? And Dante?
I don't know. I didn't read
Something
Dante.
Like that. Oh, well, I'm sorry.
You're asking...
You're not as well read.
I'm well read with modern stuff.
Oh,
okay. Like fantasy and
anyway,
cool
it's not... It's not abandon all hope or anything like that. The sign over the gates of hell. That's not quite what this is, okay?
Are you sure?
It feels like it some days, okay? It really feels like it some days. But no, that's not really what I mean. So there are a couple things I want to talk about here, and that's just stuff I notice in some of the groups I'm in, some of the investors I talk to.
Stupid people.
The first thing is basically people will get into a stock. And it will be hyped up. It will be one of those penny stocks.
I was just going to say penny stock.
Yeah, and not even always. Sometimes it's just a stock that people are hyping up, and and it gets bid up like, maybe double, 100% or more in a short time, and then people will just jump into it because everyone else is. And a lot of times, almost always, they're going to get sorely disappointed because it doesn't work like that. Okay, now some people, they'll jump in and it'll keep going up, and that's great, and count yourself lucky if that happens.
It reminds me of the one time where there was what is it? I'm not going to say the name, but it's a stock advisory service. I couldn't think of what it was called.
Yes.
That said to buy into this certain stock, so it went up just because everyone bought
from
it.
the Fool.
But
yeah.
I didn't know if I should say the name.
I already did in a previous episode, if you remember.
Well, it's from the Motley Fool then.
Yeah.
And basically it was just only because everyone did.
Yeah.
Not because of
and then it actually went down. I'm actually curious. I won't say you'll hear I don't want to say what what the stock is, but
no, I know not to.
It's actually right around where it was when they first recommended it. It was at like 160. Right now it's at 162. When they recommended it, it literally went over 170 in one day, and it still hasn't recovered yet. And that's I told everyone I'm in a group about the Fool, and I said don't buy into the stock. It's been bid up like $10 just because of their recommendation, and it's just really stupid to just buy into it right now because it's literally all hype. There's no news, there's no earnings coming out today or in the near future. It's just all hype, and just because they recommended it, and then it quickly within the next week got crushed. It went down below 160. Now it's around 162. So, and that's, whether the stock itself is worth buying into, I don't know. But just a stock moving $10 in one day because someone recommended it, that's not a time to buy into it.
Well, that's right? When you said what you said at the beginning.
That's
what it reminded me of. So
anyway, but people will, jump into these stocks just because everyone else is. And sometimes it'll work out and they'll be lucky. And sometimes it won't work out. It's much like gambling. I've made that comparison before. And the closer that your trading appears to be like gambling, the worse off you are. You really don't want to go down that road. It's not gambling. It can feel like that sometimes, but it's really, really not. And so people will do this without doing their own research. We have a saying in the investing world: do your own due diligence on a stock. And you really have to. You have to do your own research. You can't just jump in and hope that it's going to keep rising just because it has been over the past day or week or whatever, right? You have to do your own due diligence. Why is it going up? Is it all hype, or is there a good reason? And you have to research that. And is it already kind of too high of a price to get in? Like, even if there is a good reason, maybe that's already priced in now, and now there's not really any reason to keep going up, right? You'd be surprised when there's news how quickly a stock's price will change. And so if you get in after the surge is over, then it's just going to sit there, or it could even sell off again. I talked about a while ago the pendulum effect, of a stock will jump up in price and then it'll sell off a bit because it went up too far, right? And so if you get in at the top, that's going to happen. So when you get into a stock, you want to do research. And I know, a lot of people don't want to do that. I know a lot of people would rather just listen to someone else, would rather just jump into a stock that maybe a friend recommends, or a random person in a Facebook group or on Twitter or on Reddit recommends, or whatever. But you really want to do your own research. Like, if you are, this is my opinion, this might seem a little harsh, but you have two choices in my opinion. If you're the type of person who is willing to do research and is willing to spend the time to either find good companies or, maybe you get some ideas from others, from services you're in. Like the Motley Fool is a good example with their stock advisor. Not a bad service, just, don't play into the hype.
Yeah.
Or, I have a subscription to Zacks. I love my subscription with them. It's awesome.
I love them.
And there are tons of other services, or there are just, people in Facebook groups, or there's, all the time I see Discord servers where people will give stock recommendations. And, you can get ideas from places like this. But always, always, always do your own research. Why are they recommending it? Is it a worthwhile recommendation? Is it still going to keep going up? Is there a good reason for it to? And it just depends, what kind of investor you are, whether you're a value investor or a growth investor. You'll look at different things, but you have to learn how to do that due diligence. And so if you're willing to take the time and do that, then that's great. Do that. Get the ideas if you want, or find your own ideas, learn how to do your own research, learn how to screen stocks, and that's great. Or if you're either too lazy, which no judging, and that's just maybe it's not your thing, maybe you're too busy with work, maybe you just couldn't care less about finding specific stocks. If that's the case, then don't do it this way. You can buy into like an index or a broad market ETF, like for instance, VOO is a Vanguard ETF for the S&P 500, or VTI is a total market ETF, right? You can buy into something like that and never touch it again, and that's not necessarily a bad thing.
That'd be me.
Right? Maybe your profits won't be as high as if you did your own research and everything else. But that's the trade-off you make. Right? Like the more you put into something, the more you'll get out of it. You can't just hope that, put all your hopes on this one person who claims to always be right and just buy whatever they say to buy and sell whatever they say to sell. And, if you do that, you're not going to really succeed. Maybe you will for a while, but what if that person starts picking bad stocks? You just don't know. Right? You have to do your own research. Or, I guess there's a third option where if you have enough money to do this, you get like an investment advisor or something, or some kind of financial manager who manages your portfolio for you. Right, but then you're giving up a percent of your profits, which you may or may not be willing to do, and but that may be able to return better than what the index does, right? So it's a trade-off.
It's worth it, I think, for some people.
For some people, yeah. If you have enough money to do it and you just don't want to touch it, fine.
Because that would be me. Like I know.
Yeah.
I know I act like I'm kind of good at this, but I'm really not.
You're along for the ride.
Yes.
Yeah.
I could never do it myself.
Yeah. But, it's just a matter of how much do you want to put into it. And the more you're willing to put into it, then the more you'll get out of it. And I'm not saying, you have to do this as a day job or something. I'm not saying that you have to spend every waking moment doing research. It doesn't have to take that long. Especially like with options. I don't spend that long on these trades. Like you saw me doing a live trade with XLU. Now, I'm already familiar with XLU because I have traded it before. If it was another stock that I have never touched before, then I would do research. I would at least check like current RSI. Is it overbought? Is it oversold? What's the recent price action? How has it been going in the past couple weeks? I would look at that kind of stuff. I wouldn't just, it says to buy this random stock I've never heard of before in my life. Sure, why not? Even my own script that I have built for that purpose, I still check, what it's telling me if I haven't heard of it before. I've heard of XLU, so, I made that trade. But, and I've traded it before. But, it's just, you have to do your own research.
Right.
So the next part of this is, once you've made that trade, now, if you're making that trade, presumably you have a good reason to. Presumably you believe that it's going to go in the direction that you've chosen, or going to do what you believe it's going to do, basically, and you have a reason to believe that. Now, what a lot of people will do is, they'll make a trade, whether they're bullish or bearish or neutral on a stock, whatever it might be, but they'll make a trade, whether it's options or stocks, and it'll go against them, and they'll panic. And again, we talked about this last week a little bit, but they'll sell it at the first sign of it going against them. And you really don't want to do that. But what a lot of people will do is kind of hope, like, I really need this to go in this other direction. I really need it to, I hope it goes up, or I hope it goes down, or I hope, whatever I needed to do. And I mean, that's a normal thing. Everyone will say that sometimes. But if that's your only, the only thing you're relying on, then you have an issue.
Yeah.
Right? Do you still have a good reason? Is your original assumption still valid? Do you still have a good reason to believe it's going to do what you believe it's going to do? Right? If the answer is no, then sometimes it's just better to exit out of that trade. But if you really did your research and you have a good reason, whether because of the chart or recent price action, or because of just statistics, if you're doing options, especially credit spreads, if you still have a good reason to believe it's going to do what you believe it's going to do, then you stick with it. You don't want to fear losing a couple days, right? I've had stocks that have lost for several weeks, or just gone nowhere for several weeks, and then all of a sudden they turn around and go in my favor. So you have to know, why do I think it's going to do what I think? Is that still valid? So for example, I mentioned with SPY, it touched our short strike, 317 this morning.
But you left it.
But I'm leaving it because it has another month. You have to realize, I don't remember if I talked about this before, but my first ever options trade was on Celsius Holdings, CELH.
Oh.
And it was $400 or $500 trade, right? It was probably way too big, but it's what I did, right? And right after I know I talked about this before, but I'll mention it again. Right after I bought it, or within a couple weeks, it started to fall. Now, I had bought a call spread on it, so I wanted it to go up. And it started to fall. My options started to lose value. And this option wouldn't expire for 4 months. Right? It had 4 months to do its thing. But within 2 or 3 weeks, I think 2 weeks, it started to fall. Not even that significantly, just enough. And I thought, oh my gosh, it's, it's going against me, and I was panicking, and what should I do? And I think I ended up selling at a loss, right? Because I didn't know what to do. But in the back of my head, I realized 4 months is a very long time for something to turn around. Right? That's a really long time for me to be right.
Yeah.
Even if I'm wrong at first, 4 months is a long time. And, about a month after I'd sold, I just kind of happened to look at it again just out of curiosity. Oh, yeah, it went in the right direction. I could have profited off of that. But, it was my first ever options trade, so I wasn't too hard on myself. But it just went to show, 4 months is a very long time. Or with SPY, 1 month is a very long time. A lot can happen. I mean, especially now where in 1 week the market can rise or fall 4% or more in a single week. Anything can happen.
Yeah.
It can be up today. This Friday it could be down 5%, or next Friday it could be down. Or you just don't know. I mean, sure, it could go in the other direction too, but you have to let it play out.
Yeah.
And for me, I said I'm fairly confident that it will at some point go down because there's just too much optimism priced in. With rise in cases in all these different states, and several states having an all-time high of cases of the coronavirus, it's ignoring too much. It's pricing in too much optimism. I strongly believe at some point it will fall again. Not horribly, not like in March or anything, but I believe this is the upper end of its range. And so because of that, I'm going to hold. So, it's just, you have to know what's going on. Now, kind of a counter example to that was a couple months ago. I had a trade on Herbalife, HLF.
I remember that.
You remember this one?
A little bit.
And so Herbalife, it was just before earnings.
Because I don't like MLMs.
I know. I don't know why they're a stock. They're a weird company. Anyway, it was trading around like $34 or so. And, it had been kind of slipping. So I put in a call spread at 40 and 42.50. And felt pretty good about it. Well, earnings, they just hit it out of the park. Like, just insane. And the stock rocketed up just to $40 overnight. Like, oops. But, I figure, that's a big move for a stock like that. That's like that's a really big move. It was a 20% move.
Is that when did you get rid of it? I don't remember what you said.
I'm going to get there in a second.
Okay.
I haven't.
Sorry.
And so I thought, that's a huge move for a stock of that price. I'm sure it'll settle down and it'll fall again, right? I mean, that was logical. And so I held on to it for a while, and I even, just to get a little extra credit, I sold the put spread side of of that trade, and it just I waited and it just kept going up. It was $41 and then $42 and $43, and it maxed out at about $44. And at that point, it just I waited even a little bit longer. I'm like, maybe, the market's not doing great. Maybe there'll be a pullback. The stock will fall again. But at some point, actually, I think it might have hit $45. At some point, I was like, you know what? I'm really, really, really in the money at this point. I could roll it out to another month. But is there really a point? I don't think so. And so I ended up closing that trade at a really significant loss. Right. And that hurt, but it just what happened. But I no longer had the confidence. I started to hope, and that's where you have to watch out. I started to hope. I hope it will go down. Do I have any good reason to think it will? No. I mean, any logical person would say, unless some horrible news strikes, it's probably not going to fall below $40 or anywhere close. Right? It's just probably not going to. It kind of halted around the 43, 44, 45, but it's probably not going to fall much below that. That would be that'd be like a 10% or more drop, 15% drop, right? And that just wasn't going to happen. So I closed it at a loss. So my advice is that when you start looking at your trades and operating purely on hope, where any logical person would say, that's probably not going to work out. Even given another month or whatever, it's probably not going to work out, but I really hope it does, It's probably time to sell. Probably time to close that out. I've seen people, again, in groups where they will buy into one of those hyped up stocks. It will fall 50% because it was, hyped up. And they'll say, I hope it goes up. Should I hold and hope it goes up, or should I just, sell it and cut my losses? And the answer is always sell, unless you have some really good reason to think it's going to go up again. But if that stock's fallen 50%, I mean, it's probably not going to go back up.
Yeah.
Right? I mean, that's just probably
you have to use
not gonna
common
happen.
sense.
Right. So it's just a matter of logically thinking about it. You know, I've said before, there's no room for hope, or for, not hope, well, yes, hope, but no room for emotions in trading.
Yeah.
Now, that's not to say, we'll have a topic on this in the future, the market is irrational quite frequently.
Yeah.
You know, the market is not perfectly rational, and people buy and sell for no good reason all the time, but you can't let that get into your trading. You have to develop a system and stick to it, execute that system, and just don't let emotion get into it. So if you're only holding on to a trade because you're hoping it'll go where you want it to go, but any unbiased logical person would say that's probably not going to happen, it's time to get out. And this goes back to, you know, you have to accept losses sometimes. You have to accept that sometimes you're going to lose. With options, you're going to cut that down significantly, but you're still going to have maybe 20% or so that lose. Maybe less, but you're still going to have some that lose. And a lot of times with, you know, selling options, as an option seller, our losses are almost always much bigger than our wins, right? It gets offset because we win a lot more often, but you know, if you have a $2 wide spread that you get a 50-cent credit for, you could lose $1.50 or $150 on that, right? And so it hurts sometimes a lot more as option sellers to lose, because depending on how big of a risk you took, and we talked about, you know, position sizes and how big of a risk you'll take and that kind of stuff last Wednesday. I think in episode 9, but you know, you have to be willing to lose, and I've said this, every cent of what you risk.
Yeah.
And sometimes you will. And there are ways of mitigating that. There are ways of you know, reducing that a bit, but your losses are still going to hurt, right? They're still going to be bigger than your wins, right? But just in the actual value. But because you're winning so much more frequently, that far more than offsets the losers. But, you know, it doesn't feel good to lose. So
it doesn't with anything.
No, of course. That doesn't mean you're a bad trader. It doesn't mean anything. Everyone loses from time to time. If anyone ever says, I win every trade that I get into, they're a liar. You know, I mean, they're just a liar. You know, or they've just begun and maybe done like 3 trades, right? So just don't trust anyone like that. Everyone loses. It's just a matter of winning more often than you lose.
Yeah.
So, you know, be willing to accept your losses gracefully. You know, when you start realizing, yeah, I'm just basing all this on hope. I really have no more reason to assume that I'm correct about this trade, that my assumption is still valid. It's not still valid. Then it's probably time to think about closing it, right? And that's just how it is. So, you know, that's why it's so important, as I said, to know why you're in it. If you're just basing it off of someone else, and this is a really good reason, if you're just basing your trade off of someone else, then when it starts to go against you, you're going to kind of second guess yourself. Like, is this really a good trade? You know, I just listened to that person, but what if they're wrong? What if they have no idea what they're talking about, or whatever? Like, if you got into last week's option trade on SPY just because I said it was a good trade, and then, you know, you didn't do any of your own research, or at least have your own assumption about where it's going. Like, if I say, yeah, I think SPY won't go up more than this amount, and you say, no, I'm really bullish on it, I think it's going to keep going up, then why would you get into that trade?
Yeah.
Because you're literally saying by August 7th it's not going to be over 317. So that's a bearish position by default. So if I'm bearish, other people aren't. There are lots of bullish, analysts and traders and so on and so forth. I mean, just look at the market, right? There are lots of people who are very bullish on the market, and lots of people who are bearish. You have to know which you are and why. Because if you got into last week's trade and then now it's going against you, obviously, because, SPY has been going up for a week, then you're going to think, oh, he was stupid. Because it's going against me. Do you think by August 7th that will pull back, that, the market will pull back a bit? Or do you think that the economic situation is either so positive or whatever that there's enough optimism that it's going to keep going up? You have to answer that question, and based on that answer, you have to make the proper trades. So if you're bearish, like I am, or neutral to bearish, then you would say, yeah, I think you're right, so I'm going to hold on to this trade. But if you're saying, no, I think it's going to go up, then don't get into it, right? Same for today's XLU. Today's XLU is not necessarily bearish, but it's not extremely bullish. It only can go up to $59. Currently, it's at 56 something. So that's, maybe, what is that? Few percent, right? Let's see, what's XLU right now? Look. XLU is now at 56.84.
You can choose your source from options on NPR, Fox News.
Alexa, stop. All right then. Well, anyway, so between where XLU is right now to $59. You have about a 4% buffer. So what I'm saying is I don't think it'll go up past like 4%, 3.8% by August 21st. Now, if you look at that and say, oh, no, utilities, I think they're going to get way up, that's, I think I'm bullish on it, then don't do this trade. But if you're going to say, yeah, you know what, I think you're right, I think it doesn't have that much upside, then you can get into this trade. Right? That's just, you have to ask yourself that question. If you're bullish, then you might get into a put credit spread. You might, for XLU, you might do, instead of 59.61, you might do, and this is just pulling out of my head, 52 and 50 or 53 and 51 or something like that for puts. Right? That's a bullish trade. So, and I'm not recommending that, or it's up to you. You have to know, where do I think the market's going to go from this point? And based on that, you make your trade. So never just listen blindly to someone else, because if that trade goes against you, then all you have to cling on to is hope. All you have to cling on to is, well, I hope that person's correct, but I don't have any of my own assumptions to go on. I don't have any of my own research or informed, assumptions or anything to go on, right? So that is a lot weaker, where you're a lot more likely to fold and to sell out, to close out that position at a loss early, because you have nothing to hold on to. Right? Versus if I say, yeah, do this trade for, XLU, for example, or SPY, and you look into it and you look at the economic situation and, what's been going on, and you agree, yeah, I think that there's more downside room than upside, then you're confident. And you say, okay, well, even if it goes against me, I'm still pretty confident that I know, or I'm pretty sure that it's probably going to go down at some point, right? But you know that for yourself. So that it's just so important to do that for yourself, to do that research, to not just put it in someone else's hands. And again, to summarize, if you don't want to do that, if you just want to either, not have to do that research for yourself, or you want to have someone else take care of it, I mean, you can either buy into index ETFs or something like that, like I mentioned, VOO, VTI, SPY, all those sorts of things are good. Or there are ETFs for different sectors too. I mean, you can get the technology ETF is XLK, the NASDAQ is QQQ, which is like outperformed everything else this year, and in recent history. So, if you're saying I'm really strong on tech, then maybe I'll get into XLK or QQQ or something like that. And you can do that. And then you don't have any other decisions to make, right? And that's cool. That's totally up to you. But that's one option. You might not make as big of a profit, but it's just time versus, profit that you could make. It's how much do you want to put into it versus how much do you want to get out. Or you could have someone manage it. Like I said, if you have a big enough portfolio and you still want to get good returns and it's worth the cost, then you can get someone else to manage it. That's all up to you. So, but if you're like me, then you might want to learn about it, kind of educate yourself, know how to do the research, and know how to form your own assumptions on things, and that's great, and that's what we're here for. So I hope that helps.
I got off the hook today.
Yes, you did. There really wasn't too much to really ask.
Yeah, there wasn't.
So, sorry about that. So, yeah.
This was fun, though.
Yeah, this was good. I think it's a really important topic. And, I know. So I hope that makes sense to everyone. And I haven't mentioned this for a while. So if you are listening to this recording and you'd like to tune in live, we do broadcast it at 12 p.m. Eastern, as I always say, Monday, Wednesday, Friday. Unless it's a holiday, then we change it up
accordingly.
But you can go to possiblepromise.com/live. If you want to see these show notes and leave a comment, I would love to hear your comments about what we're talking about here. You can go to possiblepromise.com/11. And so with that, I hope that everyone has a wonderful couple days until we come back on Wednesday for another episode of the Possible Promise podcast. Have a wonderful day, everyone.
Bye, everyone.
Bye.